The analyst behind that call is with us here at Post 9, Oppenheimer's Rupesh Parikh. It's great to have you, Rupesh. Thanks for coming in. Is the story about inventory or margin, really?
It's really margin right now. So if you look at last year with all that excess inventory, target operating margins were 3.5%. So longer-term bull cases here for them to get back up to at least mid-single digits. And if that happens, we see $10 plus earnings power versus under 8 this year.
So why the net caution then?
Yeah, so from a bottom perspective, we do think shares has bottomed. They were down close to $100, so I think they have bottomed. I think it's more on the top line outlook. You look at discretionary categories in the U.S., whether it's clothing, consumer electronics, sporting goods. A number of these categories are in negative territory. So we're all right now trying to pinpoint exactly when we turn back to positive growth. So that's why I think you see the volatility is more top line driven.
How do we do that, Rupesh? I talked to Michael Fidelki, the CFO of Target, and he was saying he is seeing some modest improvement in consumer discretionary, home and apparel, better in Q3 than Q2. But how do we game out when sales ultimately recover?
Yeah, so I think for the balance of the year and into early next year, we still see negative comp store sales trends. But I think as you move further and further away from the pandemic, so middle of next year, towards the back half of next year, we do think comps turn positive. But it really is just lapping these difficult pandemic laps. And, you throw on top of that student loan headwinds and other consumer pressures out there. So I think it's really just a matter of time. Target excels on the merchandising side. You go into stores, stores look great. Some of these new brands that they've added to stores should gain traction over time. But really just sitting out these discretionary headwinds. But we do think later next year you should see a positive comp trajectory at Target.
So is it just macro where consumers aren't buying as much for their homes or electronics or apparel, and we just have to wait for that to recover and adjust post-pandemic? Or is there something Target specific here? Are they losing share, for instance? Is there still an effect from the boycott after the Pride Month fallout? Can we tell?
Yeah, so I think it's largely macro. So if you look versus pre-pandemic, Target sales are still up 30% plus for the same quarter. So, on a multi-year basis, they've continued to gain share. Just near term, just given that they gained a lot of share, they are giving some of that back. And you look at what Walmart's doing. Consumers are migrating more to Walmart just given their value proposition and just all the inflation out there. So, yes, near term, Target is losing market share. But on a multi-year basis, we believe they've gained share. And I think as you start to lap these more difficult comparisons on a multi-year basis, we think they should return back to growth. And if you think of that consumer going to Walmart, if inflation starts to moderate, maybe some of those consumers would go back to Target, just given they may be seeking more discretionary products.
What do you think the read-through is for Walmart, at least in the short term then?
Yeah, so I think Walmart's reporting tomorrow. We think it's going to be another strong quarter. We expect at least a 3% comp store sales increase. Some of the whispers are out there for 4.5 to 5. We think they can get up there. So I think it's another beat and raise quarter for Walmart. They're gaining tremendous share online and in store. So everything we saw from Target today, I think it directionally still positive for Walmart. But Walmart is clearly in a different situation than Target, just given their larger consumables mix.
One last from me. There's people looking for laggards, for bargains, and they're pointing to Etsy's. I know some of these are not in your coverage, but Etsy's and Dollar Generals and Pelotons, for example, where you've got large declines but somewhat of a base. Would you be looking for things like that?
Yeah, so our coverage universe, I'd say Ulta Beauty is that one that we would identify. So stock was 540 plus, went back down to 370, now it's up to 415. So Ulta is one where we see significant upside potential. And there, we think fundamentals are intact. And we saw a Target today. Beauty is still really strong. And I would say almost on fire, even after these difficult comparisons.
Yeah, I wonder what they would have done without Beauty in Target's case. Rupesh, thank you. Great guidance. What a busy week. Appreciate it very much. Rupesh Parikh from Oppenheimer.